Welcome to the Analyst View by Capital Group, a podcast series that offers concise investment-centric dialogues. In each episode, they'll deep dive with Capital Group's analysts to bring you focused discussions on sectors and themes shaping the investment landscape. Straight to the point conversations designed to provide you with the knowledge you need. In the second of a two-part episode focusing on Latin America, Investment Director Natalia Zeman speaks to equity investment analyst Ana Reynal, and the pair turn their focus to Brazil. They outline how the market is less tied to US trade than others in the region, and how Ana identifies the country's disruptive innovators.
Great to be back here with Ana to continue our conversation around investing in Latin America. Ana, thanks again for joining me.
Glad to be back.
In the first part of our conversation, we talked about Mexico and how growing up there has given you a valuable lens when it comes to analysing companies and spotting opportunities in the region. Today, we're shifting our focus to Brazil, the other major market in your coverage. Mexico, as we discussed last time, has a deeply interconnected economic and trade relationship with the US. Brazil's dynamic is quite different, a much larger domestic market, less reliance on US exports. What does this dynamic mean for investing in Brazil, especially during this time where we are seeing global trade patterns shifting?
I think Brazil has little to lose and lots to gain from this trade war by becoming a larger importer into China, as China tries to decouple from North America. So again, here, our investments are always underpinned by strong bottom-up research, and one of our large holdings is Rumo, which is the only railway operator in the country's largest and one of the world's most productive grain regions, Mato Grosso. So Rumo transports around half of all the grains produced in that region, a quantity which, by the way, is growing every year, to the port of Santos, which is the largest Latin America port, where all these grains and food products are shipped to China. Rumo is also adding a lot of capacity and length to this railway into the heart of Mato Grosso to keep up with this growing demand. And as you can imagine, a railway expansion is not a 1 to 2 year project. This is a 5 to 10 year project. So while most of the market is looking at sort of the crop for next quarter, here at Capital, we're okay to be patient and thus have had opportunities to buy this at very attractive prices when people don't like what they're seeing short term.
Very interesting. What strikes me as I listen to you is just the confluence of drivers that you outline. So it's not just reshoring, it's not just some of the domestic drivers in the country, but it's also this reconfiguration of supply chains and exports to other countries like the Global South or China, or even e-commerce penetration, or the different characteristics of the younger generation who are becoming the major consumers in these countries today. So a very interesting outline of a confluence of drivers and how that backs up your selective investment choices in the region. I'd love to focus a bit now on Brazil, which, as you've already mentioned, has a very different dynamic to Mexico, much more independent from the US from a trade perspective, a large domestic market, and something I find particularly interesting, a reputation for producing innovative disruptors. Nubank, the Brazilian fintech disruptor, is another financial company that we have held across a number of our funds. What is it about Brazil, in your view, that enables this disruptive culture of innovation?
That is definitely not a small question. Let me start maybe taking the opposite side. Why shouldn't there be such a disruptive culture? Brazil is one of the most inhospitable environments for startups. It has some of the world's most complex tax regulations, very complex labor laws, and generally a high level of bureaucracy. Also, it's an incredibly competitive market. Many very good companies from other countries in Latin America have tried and failed to set up shop in Brazil over the years, and yet it has one of the largest entrepreneurship communities in the world. To put this in context, in Brazil, 1 in every 4 adults are self-employed, which is one of the highest rates in the world, and small businesses make up 2 out of 3 new jobs in the private sector. I think these numbers in such an unwelcoming environment speak loudly about how strong the culture of entrepreneurship is. And I think there are many factors at play here, but I do think there is a special fuel to this fire in the confidence and the drive that seeing people make it big gives to the next generation of entrepreneurs. Brazil has the highest number of self-made billionaires in Latin America, And they are way more relatable than those in the rest of the region, because most actually didn't make their fortunes by acquiring a government concession, for which you need existing capital or to be well connected or both. And since the military dictatorship banned entrepreneurial activity until the mid-1980s, many of the founders of the most successful and sort of emblematic companies in Brazil are still prominent figures in the media and in their local community to this day. Self-made people like Luisa Trajano of Magazine Luiza, Andrés Teves of BTG Pactual, Cristina Junqueira of Nubank, and even Eduardo Saverin, who co-founded Facebook. The list goes on of people who built massive businesses from the ground up. They all live sort of rent-free in the minds of every young Brazilian entrepreneur who thinks they can make it big. On top of that, you have a large domestic market, which sort of gives anyone a large enough total addressable market to dream big, and very deep capital markets that allow founders to fund their ventures with relative ease versus other markets in Latin America.
Fantastically wonderful description, I think, of how understanding the country and the culture of the country can really support how you invest in a country and the companies that you choose. So thank you very much for that description of innovation in Brazil. I'd love also to hear a bit about how you identify the innovative companies to choose when you invest in Brazil, because you mentioned how many entrepreneurs there are, how much innovation there is, how many small companies there are, but only a very small number of them become the Nubank of tomorrow. So how do you go about identifying?
Yeah, that's very well put. The first thing I'll say is that it's not a static decision that I make at the very beginning of the journey. It sort of evolves over time. Most disruptors, most of these special companies that then go and make it big, will come to market with an idea or a business that seems impossible by common knowledge. That's kind of the point of starting a disruptive business. And that's where they and we can create a lot of value for our clients. But as you well put it, many don't make it. And it takes a lot of sort of challenging my own self-beliefs and ideas about these markets to even think that whatever they're trying to do might be possible. And I think more importantly, that they are the right team to execute that idea. That's not a conviction one can build overnight, over a PowerPoint, or even during the sort of early innings of a successful business. So in terms of how I go about identifying over time, I'm going to oversimplify my process here, but I'll give it a try. I think businesses are driven by people, plain and simple. So I spend a lot of my time trying to understand how the people behind the business think, how they execute, how much clarity and focus is there in the sort of in the end goal, how they reflect on how their industries are changing around them, how they reflect on their mistakes, how they pivot, how they attract and retain talent, and also how their incentives are or aren't aligned to those of our clients. Then I guess a second sort of big part of this analysis is the business and the industry. I need to understand whether the company is truly offering its customer a new and unique thing or service, whether the unit economics make sense in scale. We've had so many, great ideas that work when they're tiny, but then at scale, it just doesn't translate. And what is the likely response of the incumbent? Finally, I spent a lot of time understanding how the business's growth will be funded. Do they need access to debt or equity markets? Or are they so profitable that cash generation is enough, for example? I am navigating in a world with very high interest rates, so this is not a minor issue that companies go through. If I can get comfortable with all of the above, I might start a position in a company, and then I have capital's best asset on my side, time. Time to continue evaluating each one of these variables through time. And the more confidence I can get, the larger the position will be in our funds. And in the case of Nubank, that has been exactly what has been happening over time. When they first presented to us the idea that they could have tens of millions of clients and a 40% ROE business in Brazil, I thought that was completely impossible. But I also thought that they were onto something, trying to solve the pain points of an underserved and very large population. And the unit economics looked incredibly interesting. Turns out now they have over 100 million clients in Brazil, and ROE is even higher than 40%. Did I start with the decisive position I now wish I had when I first met them? No. Do I regret that? Also no. I think between the idea and the business they have today, there is a world of execution, product innovation, regulatory tailwinds that I didn't foresee, and our position sizes have increased to match what we've seen.
So people, industry, and funding, a helpful framework and simplification of your process, as you say, but very, very interesting example of how you look for those stellar companies of the future. Mercado Libre, another disruptive company that we have invested in, e-commerce company, now also a payments company, founded in Argentina but incorporated in the US and operating across the region. Does it follow the formula that you just mapped out?
Yeah, I mean, I think Meli is another great example of very special people behind a business that when they started seemed completely impossible. I mean, selling goods that they have never seen or touched to a generally distrusting population, which for the most didn't even have credit cards, and then being able to charge a commission for that. I think even in the super entrepreneurial ecosystem of Stanford, the CEO and founder of Mercado Libre was told that was completely unfeasible in the late 90s. And they went on to not just build and grow the Mercado Libre e-commerce platform, which on its own has over 200 million active users, but also out of necessity, initially, they built Mercado Pago to be able to collect payments. And what started as a sort of little sidekick enabler, this online payments platform, is now a fully fledged fintech business that includes everything from digital account and credit underwriting to buy now, pay later, one of the largest physical points of sale networks in the region, investments, insurance, crypto, everything. And that is a business that is even more profitable than e-commerce, the e-commerce platform itself. Now they're trying to build the largest digital advertising and media business in Latin America, and I do think they have what it takes to execute on that. The market has changed, competition has always been super intense, and through it all, Meli has consistently executed and built this powerful ecosystem that continues to be sort of a win-win for sellers and buyers. They've never been tempted by the many shiny new things in the industry, so fresh groceries, content, quick commerce. They've not invested in any of that. Instead, they've been laser focused on what actually matters for the value proposition, which is assortment, free shipping, reducing friction, access to funds for both buyers and sellers, and user experience on both sides of the platform.
So I'm hearing again the importance of people, leadership in this, embedded in this story, and also focus, the focus that the business has taken over time.
The focus on the clarity of where you're going and why you're going there. I think there's a lot of people who, there's waves, there's things that become fashionable. Trends. And then you have 20 founders come and say, I can do this. But if there's no focus and there's no clarity, there's no business.
Yeah, no, that's a fantastic point. The other thing that strikes me about Meli is when I look at our global funds, it's up there in the last few years as, Meta and Microsoft and some of our largest US tech holdings. And I think that's just a helpful reminder that innovation and value through innovation can actually be found globally. And today we're talking about Latin America, but I think even, beyond in other emerging markets, there are some fantastic examples of innovation that get forgotten about. And this is a brilliant reminder of that. I'd love to pick up on two of the drivers behind both Meli and also Nubank, which are the consumer and digitization, the digital driver, that are underpinning both these companies' success stories. Are these structural drivers that you expect will continue to feature across the region over time?
I think so. Yeah. I mean, Latin America continues to be a region with a pretty young population at an average age of 31 years old. They are hyper-connected, avid users of the internet and social media, with an 80% plus smartphone penetration and 8 to 10 hours spent on the internet in average per day. E-commerce penetration is still only 13% in Latin America. You have at 27% in the US, at 42% in China. So yes, I think there's still an attractive runway for growth in the long term. The only area I doubt will ever go online is grocery. People like going to the supermarket, they like seeing the food they are buying, and particularly different to other regions, they have very high standards in terms of the freshness of what they expect because these countries have amazing local produce. And they also love a good bargain. That's why opportunities like Triple B Foods in Mexico, the country's largest hard discounter and fastest growing retailer, are very attractive in my view. And that's also a large investment in our portfolios.
So another fantastic example of knowing the region, tasting the avocados, actually being on the ground in the markets, shopping there, living there. Anna, we've covered a huge amount in these 2 episodes. And as we reach the end of our conversation, I'd love to just finish with 2 final questions. Firstly, you've been investing in this region now for 15 years, so you must have a number of lessons. And I was hoping that you could share with me some of your greatest lessons over that time. And then secondly, what do you think will be different over the next 15 years as you look ahead?
I mean, Latin America is a region that most definitely keeps you humble as an investor. And after being thrashed around by the market cycles for a decade and a half, I could have you here for hours with lessons learned, but maybe I'll keep it to a handful that stands out. The first one would sort of be the one that I mentioned at the beginning of our chat. In my time frame, but also reviewing past decades, it seems to me like the only thing that has historically worked through cycles and political unorthodoxy in a lot of these countries is a long runway for profitable growth. These kinds of opportunities come along very rarely. So when I see one, I become a lot more flexible about valuation, which in cases like these has proven to be red herring over time. And I focus a lot more on what the company can look like in 5 years and how it will fund getting from here to there. Second would be that the power of delta change cannot be understated. And this applies to both macro and businesses. If something is going from horrible to bad, it's probably time to invest. And the same on the other side. If something's going from great to good, it's time to get out. I think Latin America rarely offers the kind of soft landing for investor-based rotation that some of the markets do. Another big one is that it's really hard to make money in these countries going against earnings momentum. Almost every time I thought consensus had gone just too far on negative expectations and I invested in stocks with negative or decreasing earnings growth, they haven't been great. And I guess sort of finally, I'm closing the circle with your starting statement about how cyclical these markets are. Yes, it's very hard to make money in these countries investing multi-year. So I have to do this exercise to underwrite my investments with a clean sheet of paper a lot more often than you would think given our long holding periods. And also with a strong top-down overlay because, as we discussed, macro and politics do trump almost everything else.
So macro matters, but a long runway for profitable growth can matter more.
Yeah, that's right.
Fantastic. And as you look forward over the next 15 years, is that what kind of your framework for identifying companies? Is there anything that you think, if we're sitting here in 15 years' time, that will be markedly different?
Not really. I mean, I think we're as I said, sitting sort of at a pivotal point for some of these markets, starting with this reorganization of the world order and trade relationships. I think LATAM itself will be a bit more split into closer to the US and then closer to China. But the way we look for opportunities, I don't think that changes much.
A focus on the bottom up in order to identify the best possible companies with a long-term lens. Fantastic. Well, Anna, thank you. Thank you so much for taking time with me today. We've mapped out the investable opportunity set. You've helped us to understand the value of a bottom-up approach to investing across these markets. And you've helped me to take a lens to the future as we continue to search and find opportunities to invest in companies across the region. Thank you so much.
Thank you for having me.
The Analyst View is brought to you by Capital Group, one of the world's largest and most experienced active investment managers. If you like what you heard today, please follow us on your favourite podcast platform as well as LinkedIn. Thank you for listening.
Reshoring, also known as onshoring, is the opposite of offshoring and involves the returning of the production and manufacturing of goods to the company's original country. Unit economics refers to the direct revenues and costs associated with a single unit of a product or service. ROE, or return on equity, is a key financial metric that measures a company's profitability by revealing how much profit it generates for each dollar of shareholder equity. Global South refers to a group of countries primarily located in Africa, Asia, and Latin America that share a history of colonialism and economic underdevelopment relative to the global North. Total addressable market refers to the total market demand for a product or service, assuming 100% market share. Market cycles are the fluctuations in the stock market over time, including periods of growth, bull markets, and decline, bear markets. Valuation is the process of determining the current worth of an asset or company. Holding period is the length of time an investment is held before being sold. This content is intended to highlight issues and be of a general nature. It should not be considered advice, an endorsement, or a recommendation. Products mentioned are not an offer of the product and may not be available for sale or purchase in all countries. All investments have risk and you may lose money. Past results are not a guarantee of future results. Statements attributed to an individual represent the opinions of that individual as of the date published and do not necessarily reflect the opinions of Capital Group or its affiliates. This content is published by Capital Client Group Inc. and copyrighted to Capital Group and Affiliates. 2025. All rights reserved. For full disclosures, go to capitalgroup.com/global-disclosures.